To kickstart Session 3, Charting a Just and Viable Energy Transition in Belt and Road Countries, may I invite Mr. Sandeep Sharma, Head of Business Development Renewable Energy, Taiwan and Southeast Asia, CLP Holdings Limited, to give us his presentation. Mr. Sharma, please.
Good afternoon, everyone. I'm Sandeep Sharma from CLP Holding. So before the panel discussion, maybe I'd just like to share a little bit about today's topic, about transition in Belt and Road. I think most of you know CLP in Hong Kong, but maybe not all of you. That CLP is actually an Asia-Pacific company. We are one of the largest investor-owned power business in Asia-Pacific. So we really do a lot of renewable and energy business beside Hong Kong, including mainland China, India, Australia, and especially in Southeast Asia as part of our growth along the Belt and Road countries. So everyone is talking about climate change now and energy transition, but not many people know. Actually, CLP is one of the pioneers in this area. In 2007, before any country in Asia Pacific even have any net zero target, CLP has our own climate vision. We're the first energy company in Asia Pacific set our energy climate vision. At the time, our target was 2050 0.2. But we look at how each country set their target, how the technology improved, and what we can do. So every few years we review our target, and around 7 to 8 years ago, we have aligned with the science-based target with a net zero target. Because we see a lot of countries already commit for energy transition. Our mainland China's have a carbon peak 2030, and carbon zero, net zero by 2060. India, Malaysia, many countries set their targets. So CLP also enhance our targets and try to support the region where we operate for the energy transition. So I think as part of our strategy is really to pursue growth beside Hong Kong. We are very established in mainland China. We're still growing a lot. Investing almost 600 megawatt to 1 gigawatt per year. We also try to invest almost 1 gigawatt per year in India and continue our investment in Australia. But we really try to grow in different markets along the Belt and Road, especially in Southeast Asia. And our strategy is really to partner with local, like Ms. Lantau. Malaysia is a very potential market for many developers to go, and CLP is also actively looking to invest in Malaysia at the right time. And partner with the local government and the local partners is very important because different countries have different dynamics. They have different costs. So I think it's important whenever you go to different countries, you have to find a local partner. Utilize local and international financing with the relationship banks. And CLP really look for project which provides stable and long-term contracted revenue, leveraging our expertise and commercial experience. So CLP has been established in Hong Kong for a long time. We started investment in renewable energy since 2004 with our first wind farm in mainland China. So I think it's important to use our own expertise and also what we learn in mainland China and bring it along the Belt and Road countries and support the growth of those countries. So maybe I'll share a little bit on Southeast Asia. As I mentioned, 9 out of 10 ASEAN countries already have the net zero targets, which means there's a lot of opportunity because they have a lot of complexity, but it also means a lot of opportunity because the government have set up policies and clear directions for investors to enter the market and help them to meet this target. So the key trend we see in energy for the transition is there's a real rapid economic growth driving the energy demand. Southeast Asia is an emerging market, young population, they're still growing a lot. And with the backbone of the AI, is driving this demand even more. And the key thing is, out of the whole energy sector, electricity is really outpacing the overall energy growth. While the fossil fuel is still dominant, but it's declining. So I think most of the country in Southeast Asia, all along the Belt and Road countries, are still dependent on the fossil fuels. But there's a clear trend. This is decreasing. And the clean energy investment is increasing. And all start from the net zero pledge by the government. So they need a lot of investment in order to meet their target. So there's a lot of opportunity for everyone to enter this market to support the growth. And I think as companies like ourselves, we try to bring our expertise together with our experience. Mainland China has built a very good supply chain and ecosystem in the clean energy, which can be used to support the growth of all these Belt and Road countries. So we are trying to put our expertise, what we learn, and bring it to there to lower the LCOE, support the growth of the country. So it becomes a win-win situation for the investor, for the customer, community, and the government. Here are some numbers. So I think the trend is very clear. Fossil fuel is still dominant in most of this country. It still depends a lot on coal, oil, or gas. But the trend is not changing. Clean energy is going to continue increase the investment, especially in Southeast Asia, will be dominant by solar. So we don't see the trend will change. It's about how fast we can achieve this. And that depends on how much investment together, developer, the banks have to work together with the government, with local developers to get this done. So I think the trend is there. There's a lot of opportunity, but there's also a lot of challenges. So the trend is there. I think we can all foresee it will be done. But how fast? Can we meet the plan faster than the plan, or really stay behind? That requires all of us to work together. So there's still a lot of challenges we need to face, especially, as I mentioned, the dominance of coal. You cannot have stranded assets. They still have another 20 or 30 years to operate. If you close them down, we need support from banks. For example, transition finance. Maybe our friend from DBS will share a bit more on different solutions later. How we can support the faster transition. And another thing is work together. Asian countries trying their best to work together. There's a lot of energy security issues. How we can go through this hurdle and work together while use different financing, innovative solution, and gather more developer to invest. This is important, and there's still a lot of work to be done. So I think there's few key financing enabler. I'm not going to go into too much detail. In a minute, our friend from DBS will share a bit more. But I think Southeast Asia capital market mainly rely on commercial financing, and I would say a lot of Belt and Road countries are the same. But at the same time, we're seeing there are more and more collaboration and more innovative solutions in the market to support this growth. For example, in Southeast Asia, the regional framework of the ASEAN taxonomy is really supporting the growth. There's a lot of clear policy support in different countries. For example, in Vietnam, they have fair tariff. In Malaysia have their own different market. Corporate PPA markets are also starting because customers demand that. Government want to attract investment. They want to attract people to invest in data center, invest in factory. But they will ask the government, I need clean power. Without clean power, I'm not going to invest. So it's a win-win situation. It's a developer. We invest in renewable energy. The government facilitate corporate PPA for us to sell power directly to the customer and enhance the clean energy pie of the country. So there's a lot of new policies, new regulation the governments are getting out in the Belt and Road, especially Southeast Asia, to support the development of clean energy and for this transition. And there are more and more innovative solutions, including blended financing. So besides normal commercial financing, more development bank, export credit agencies are working together to support such kind of projects, to set example how this can be done to facilitate more developer and more investment in the region. So we talk about the challenges, we talk about the opportunities, but I think a lot of us are only talking about wind and solar. So 10 to 15 years ago, wind and solar was still very expensive, but now it's already competitive to base load. It's one of the key growth driver in all the market. But 10 years later, it's going to be more than that. And these are the few key technology it's going to be unlocked in Asia Pacific, especially in the Belt and Road. One is the offshore wind and floating solar. They will be unlocking a lot of renewable potential, overcoming the land constraint we're talking about. There's huge potential to unlock this technology, lower their costs, work with the community, development, and government. To unlock this potential, I think we can all achieve this transition. So I'm happy to discuss more in a minute with everyone. I think we're all in the community to support the energy transition. So thank you very much.
Thank you, Mr. Sharma. Thank you, Mr. Sharma, and please take a seat. Now, may I invite our next speaker, Ms. Serena Mack, Executive Director, Sustainable Finance, Institutional Banking Group, DBS Bank, Hong Kong, to deliver her presentation. Ms. Mack, please.
All right. Hello, everybody. In one way, I'm glad that I'm coming second after Sandeep. Second way, I'm not, because I was actually looking at the presentation. We will have a couple charts that look quite similar. But let me assure you, those are different charts. I checked. So I think what we wanted to do today in the next maybe 10 minutes or so is to give you, from a financier and a banking perspective, what is the business case for energy transition investment, especially related to today's conference, towards Belt and Road countries. Now, of course, there's another angle about us discussing this in Hong Kong. So what exactly in the context, right? So Hong Kong, given the international financial center and all the policies, taxonomies, everything that is coming together, is actually going to prove that if you think about financing in this part of the world, also in the Belt and Road region, Hong Kong is also a very good place for capital investments towards those countries and towards those projects, because of better standard, good support system, good financial system, etc. So without further ado, please still allow me to introduce DBS a little bit. I think a lot of you might have heard of us. We are definitely a bank. We are the Southeast Asia's largest bank. And we think of ourselves as a leading financial operator. But also, if you've been working with us a little bit, I don't know whether any of you here uses our banking app. I am an avid user, and I like it very much. We are a very digital and sustainable bank, and I think that kind of resonates through all the businesses and services that we provide. Now, moving a little bit on about sustainability, which also is a core topic of the day. Sandeep was mentioning that in the power sector, there's a lot of need for decarbonization. A lot of our clients actually have decarbonization pathways. So do we. So we actually also need to have our own decarbonization plans as a financial institution imperative, also to support our clients. Now, what's interesting here, though, is that we are quite science-based. So instead of having one finance emission target, I think you can count here, we have 7 + 2. So please don't ask me how to report this internally. It is quite an effort for us to collect the data and report it in our annual sustainability report, which I encourage you to take a look at. But we do try to benchmark ourselves against international standards, for example, the International Energy Agency, as well as the sector-specific pathways. So for example, for power, oil and gas, of course, we follow IEA, and then for aviation, we follow IATA, and for shipping, we follow Poseidon principles. So we do look at a sector-specific decarbonization pathways quite seriously. Now that DBS introduction is over, let me share a couple of interesting insights with you from an investment or financing standpoint that is related to today's topic, A, energy transition, and B, Belt and Road. Now here comes the charts. This is the first one. Like I promised you, it is a different chart. Now, this is how much the energy and transition investment has grown in just the past 5 years. I mean, I don't need to show you the other 5 years for you to see that, in fact, it has already doubled in 5 years' time, right? So look at the left-hand side. If you look here, you can see that actually it came from slightly less than 1 trillion. 2024 is already 2. And for sure, we see the trend of this going up. Now, zooming in a little bit more, if you look at where the investment is, APAC is half of it. So APAC alone is a $1 trillion market just on energy transition. Now, of course, if you look here, then you see a lot of our friends here about China, other countries, etc. Now, DBS, as one of the partners for the greening the investment principles for Belt and Road, also try to kind of part in our own investment and help our corporates to finance in this part of the world as well. Now, let's zoom in a little bit more. So we spoke about this is a 2 trillion market, things have really grown, and this is Asia Pacific. Let's talk Belt and Road, okay? So if you look at the Belt and Road you'll see that actually quite a bit of investment is energy related, right? And I think the reason this has to do with what I kind of think about is the 3 S of energy, like stability, security, etc., right? So that all these are interdependent. And actually investment right now, it's going to pave the way for future-proofing a lot of these energy crises that we see. Reason why is because I think you guys all know with the rise of AI and everything, the energy demand is just going up, right? Do you also know that for Southeast Asia, it is one of the highest growing demand in terms of energy consumption in the near future? 30% maybe, according to IEA. It's not small. So in order to pave the way for supporting such an energy consumption use, then the investment opportunity is now. Now, we know that the market is big, there's a lot of money going in there, then let's go a little bit further and talk about sustainable financing, which is where the bank is helping all of our corporate clients to actually raise the capital. Now, if you look here, I don't mean it, but then actually looking at the chart is actually also another 2 trillion market. So it's actually 2.2 trillion as of 2024. And we think 2025 is looking quite okay as well. Now, one thing though is that if you look here, the color actually says it all. A lot of it is still green. Right? Green project is what? We are fortunate to hear from the Consulate General of Malaysia. We know that there are a lot of solar power, wind power, hydropower, and Sandeep was talking about renewable energy investment. So there are a lot of those investment already. So actually that also contribute to a majority part of like what the market is financing in terms of like green. Now of course we know ESG is environmental, social, and governance. So naturally, there's also some parts for social as well, which we see on the rise, which also resonated with some of the earlier comments that you have heard in this conference about being socially responsible, either as a real estate developer or as a power generation company in a general corporate sense. Now, and if we further look, another thing I want to think about is this. So what happens to the economic activities in between? So we know hydrogen is good, solar is good, wind is also good. But reality is, especially for the Belt and Road countries, not everybody or not all projects will be able to go immediately from brown to green. So based under this pragmatic concept, the development of what we call transition finance is going to take a more forefront in the near future, in our opinion. Reason being, if you think about, of course, renewable and energy efficiency are all green initiatives, but then all the other high-emitting, hard-to-abate sectors also need to catch up. And they will need all the capital expenditure for R&D, for manufacturing, for renewal of the facilities, etc., etc. So actually, if you think about where the market is growing, or if we think about wanting the community or Belt and Road countries to really go into, quote unquote, a green economy, you can't leave these alone. And that's where the transition finance come into play. Now, I think in the later panel, we'll be discussing a little bit more about transition finance. So I think for now, we'll just leave it here for then. Now, the last bit I also want to talk about is that what are we seeing as trends for sustainable debt in 2026? So we've been speaking to a lot of our corporate clients across the past year or two. with obvious questions. So with everything that's happening around the world, what's happening to sustainable finance? Now, if you look at the charts that we have earlier, I think everything is somewhat going to the direction that I'd like to see. But then I think from the corporate clients and all the market as well, we are seeing similar themes. So definitely transition finance will be hopefully taking a center stage. As of right now, one statistics I can tell you is that it is only 2% of the overall sustainable finance market. So the opportunity is huge. Then, of course, we think about what's the benefit of doing green loan, whether there's any nature-based financing, what's the innovation. So we definitely see that there's going to be more discussion around innovative and new concepts in terms of sustainable finance. But then I think with the interest of time, I'll leave my comments here and happy to further discuss. Thank you very much.
Thank you, Ms. Mack. Please be seated. And before we start our panel discussion, as a reminder, online participants are welcome to use their Q&A box if they have any questions for our speakers. For the audience in this room, please raise your hands and our colleagues will pass you the mic. Now, please welcome our moderator of this session, Mr. Travis Khan, Director, Digital Energy, Power Products and Industrial Automation, Schneider Electric Hong Kong. Let's also invite our panelists to join us on stage for the panel discussion. They are Mr. Sandeep Sharma, who has just spoken on stage, and also Ms. Serena Mack. Next, we have Mr. David Fishman, Principal, the Lantau Group. And last but not least, Mr. Alex Sun, Chief Sustainability Officer, Envision Group, who will be joining us online. Over to you, please.
So firstly, thank you, Simon, for organizing this. I'm so happy to have this very good panelists with Sandeep, with Serena, and also David and also Alex online. Powering the sustainable development for Belt and Road is not an easy job, I say. Thanks, Sandeep, give us a background about because in terms of economic development of all those Belt and Road countries, powering is always a challenge, especially now. It's not just about providing the power, but the demand of net zero carbon, that roadmap, and also the development of all those green energy. And imagine it also there's different demand in those countries, no matter it's about EV charging requirement or the increasing the data center or the manufacturing or whatever industry is happening. So it's actually a big challenge on energy. And don't forget about the transition about the energy. It's also changing from centralized generation to a lot of distributed energy. So Serena also mentioned about the transition. It's not just about green, but also all those transition. So it's quite complex, and it's about how to support that development, and then how financing is a challenge. So today we bring along all this with a list of panelists to talk about this. So I want to start from Alex online. Firstly, with about the technology and digital platform. So we know Envision working on the platform. So can you tell us more about the platform that are upscaling the energy transition using AI, digital solution, how this innovation can actually accelerate the energy transition, and also how that can justify those green financing?
Okay, thanks everybody. It's very good honor to be invited, but I'm sorry I cannot join the meeting in person. Here, I just want to share some perspectives from Envision side. So as you know, Envision, we are the global leading green energy technology company. And we are offering the AI-enabled energy system solution for the industrial sectors. From our perspective, in the future, every industry cannot live without energy, especially green energy, right? So there is a big demand for reliable, low-cost green energy in the future. So that's why, from our perspective, in the future, the new energy system should be very, very closely coupled with the industry sectors. So last month we just announced our first AI-enabled energy system, especially for the industry sector. So there are some value points from our side, because more and more industry like steels, chemicals, cement, those high energy consumption industry, they are requiring the stable and reliable green energy direct supply. But how we leverage the technology, either from the green energy technology and digital technology as well, to provide more economic green power, more intelligent energy system, and a more reliable energy system to meet their needs. I think behind that, there are quite a few technology right now we are leveraging. Not only rely on the hardware part. For example, the energy system, consists of the wind turbine, solar panels, big battery energy system. Beyond that, the new energy system will fully build on the AI technology, as well as the big model. So from Envision's solutions, we have two big models. One is the meteorological large model, and the energy large model. So based on those two big models, we can offer more intelligent and more accurate weather forecasting and energy forecasting technology for this system. So based on that, we have served a lot of industry clients, not only in China, but also internationally. And more and more banks and the financial investors, right now, they are fully recognize those kind of solutions. So for Envision ourselves, right now we are also supported by the sustainability-linked loan from some banks like HSBC, Citi, and other big banks. So I have to say, in the future, the AI-enabled or AI-empowered energy system will become the mainstream solutions. Thank you.
Thanks, Alex. How about your experience, in applying that in Belt and Road country? Do you see specific challenge when you want to apply this to that? Consider they may have different readiness of the infrastructure or adoption of those AI or this type of platform.
Yeah, I think you raise a very good question. So as everybody know, in China, we have very strong and robust grid. The grid condition is good. But unfortunately, outside China, especially for the Belt and Road countries, there are very, very weak grid condition. Even there is no grid connection in certain area. But if they cannot get enough or sufficient power to develop the industry, I cannot see those countries can get well improved and evolved. So that's why those countries are urgently need for those kind of new energy system. So that's why we are offering such kind of AI-enabled energy solution to many countries like Uzbekistan, Kazakhstan, those kind of Belt and Road countries. And other than that, we also see a lot of islands, without power supply or with limited power supply. And right now they are using the conventional diesel engine solution, which is quite expensive. They cannot afford. This is unfair, for those kind of human beings who live in the island. So that's why we are also offering this new energy system solution to this island with very weak or even off-grid solutions. Yeah, so we can see a big demand from the market, even outside China. Yeah.
Thanks, Alex. I guess the point is not just the traditional power generation distribution type of technology needed in those situations, but more new technology, new energy system could be very distributed or certain green generation plus adding those like AI and platform probably can enable a more flexible, feasible energy supply to different locations. I think that's, maybe we can look into those areas. I'm sure those investment amount and the risk is totally different. And then considering that model, maybe Serena, we could talk about it later. But let's go to David on the market perspective. So I know the Lantau Group had lots of experience in China. So can you share with us about some case study in China in the market, especially around like the market design of the new energy projects? And based on your experience in China, what lesson you learned from, no matter from the tariff design or how to make those power project bankable?
Yeah, sure. So I'm a principal at the Lantau Group, APAC energy consultancy. I focus on electricity exclusively. I'm based in Shanghai. All I do all the time is think about electricity. Fortunately, I really like what I do because that's all I do. So electricity, when we talk about market design, we're talking about creating the conditions where an incredibly long list of upstream actors all get to make their profit margin while still delivering a product way downstream that remains affordable enough because it needs to be affordable because it's a crucial input for industry or for livelihood, right? And so a tariff design or a proper market design involves considering the needs of so many upstream players, everyone from those who are financing the equipment producers, and then the equipment producers themselves, the grid company, the builders, owners, operators, the EPCs, everybody involved in that value chain has to take their cut. And sometimes they all have their own profit mandates. And when you add up all of those profit mandates, especially for an emergent technology like the renewable sector was 15 years ago, you end up with a number at the end that just doesn't make any sense for an industrial input, or to ask a developing country's citizens to pay for electricity access, for equitable energy consumption, right? So the way China approached it in order to get up to that scale, right? Well, you had to squeeze. You had to squeeze a lot of those upstream players. Now, where the state sector is involved, they can get squeezed more than most, right? State banks, what are their profit return rates, right? State-owned enterprises, what are their rates of return? All of these upstream players getting squeezed. The private sector, of course, at Envision, they know how much the equipment sector gets squeezed, right? Everyone gets squeezed as much as possible, but we end up with a system that's slowly heading towards, well, what do we have? We have wind and solar prices that are competitive with brown power prices throughout China. Up in northern China, you can get wind power at a discount even versus coal-fired power. Parts of northwest China, the same, right? So how did we get to that? Well, we started with generous offtake policies, right? We understand everybody upstream has to make their money, right? So that downstream power price, well, we can't ask users to pay too much for it, but we can't squeeze anybody, so subsidies, all right? We start with subsidies. The design of the subsidy has to make sense for the generation cost at the time. As we scale up, we bring the subsidies down. We start with a feed-in tariff that's at a very high rate, and we bring that feed-in tariff down as the corresponding scale grows. Okay, now we're in an area where we can start taking advantage of some market competition dynamics. We've got a feed-in tariff, but it's not designed on a regulated basis. It's designed and fixed through an auction, right? An auction allows us to get some competitive advantages in there. All right, now we're moving away from the auction. We're moving into the so-called grid parity era that started in China around 2021, right? Grid parity era was really just a feed-in tariff by a different name, but it was a less attractive feed-in tariff, right? It was a lower feed-in tariff. And then this year, the final evolution, I suppose, of China's entire step towards bringing its renewables into the market sector, we say we're ready to marketize almost all of our renewable generators. You will sell into markets. Some of you will still have access to contracts for difference. You'll be made whole on the back end, but that's primarily so I can make sure I can meet my consumption quotas for renewables. Everybody else, go build in the market. I think it's safe to do that, though, because we've gotten to the point where our scale and our competency at building wind and solar projects is just about at the point where you can do it in the markets, right? That's what took, that took 10, 15 years of really pushing and scaling up the sector to even dare to hope to be at that point. Now, what's going to happen in 2026? Of course, we're going to see some impact to capacity growth, right? That's an known outcome of marketizing, right? We can't add 350 gigawatts of wind and solar next year in China. We're going to get as high as we can, but we're transitioning into that market. So when you're talking about how to scale up like that in Belt and Road countries, right? We're talking about trying to emulate some of that success. Well, you have to be willing to let some of your upstream sectors squeeze a little bit. Maybe the state sectors get squeezed a little bit. We're doing the civilizational challenge of an energy transition, right? Maybe the state should be squeezed just a little bit, right? But make sure everybody else who's trying to, do some important thing here, make sure your equipment makers, that they can, see good margins. Make sure your financiers can see some good margins. But be ready, have a game plan, a roadmap to say we're going to have to slowly strip those away as it scales up, as we get more comfortable with the system we've created, with the tariff scheme that we've created, with the regulatory environment, with the markets that we've created. Let's slowly scale that down until eventually we think the marketized generation can do most of the heavy lifting. Maybe not all of the heavy lifting. Maybe sometimes we still got to put our thumb on the scales a little bit to make sure the outcomes that we hope for are achieved. Wind and solar should still be built in great capacity, but it's transition. And I think it's a pathway that China has charted quite effectively, and one that Belt and Road nations throughout Southeast Asia should be able to follow too. Maybe not 100% emulating all the steps along the way, but certainly a lot to adapt from.
Right. So you have any specific lesson learned or recommendation from all this experience in China you think is good for Belt and Road country or even in Southeast Asia country?
Well, there's a famous quote about quantity, right? That quantity is a quality all of its own. China has done some amazing things with allowing quantity of volume to make up for some of the inefficiencies in market design. If I could take one example for the distributed solar rollout, and I'm not saying that, China also has a volume all of its own, has a quantity all of its own, but, there are other very, very populous nations in the world that could look to replicate that. For an example from the rooftop solar rollout, there's a tremendously successful program called Whole County Rooftop Solar. A really cleverly designed program, interaction between government forces and private sector forces to say, on a county level, and in China, a county could be anywhere from 40,000 to 400,000 people living in this county. We're going to develop all the rooftops in this county for rooftop solar. We're going to set some quotas. All government and municipal buildings, 50% of them should have solar. 30% of commercial and industrial, 20% of all residential. All right, who's going to build this? Well, I'm the county governor, I'm the county government, I'm going to put out a tender. Who would like to develop all of the solar rooftops in my county? You may come out, survey all the rooftops, do your measurements, do your evaluations. Remember, you can't pick and choose the ones you like. I want to see 50%, 30%, 20%. Submit a consolidated tender, and then I will select whoever's given me the best offer and then go build. You've got a year, you've got 2 years. Spray solar panels over the rooftops of this county. And one by one in Shandong and Henan and Anhui, this county yields 400 megawatts. This county yields 200 megawatts. In 2 years' time, they just spread panels over the entire county. You take a train through that part of the country. Both sides, the villages on both sides, are just covered in rooftop solar all of a sudden. That happened in a year. That happened in a 1 or 2 year span. That was volume, right? That was quantity becoming a quality all of its own, right? And that was something that, China clearly leveraging its size. If you left it up to the developers, would they knock on all those residential rooftops and say, hey, I'd like to build solar on your roof? Of course not. Those administrative costs are horrendous, right? I would choose the hospitals and the high schools and the government buildings. They're easy to talk to. Those are easy to contract. No, they designed it to say you want access to the good rooftops. You also have to build the annoying rooftops, right? And that created the volume. That created the quantity. Now we have a massive quantity. Now we can do something with it. Now we can aggregate it all, feed it into the grid. I've got dozens of gigawatts of rooftop solar coming online. That creates problems in the spot market, and we know about that, but that also creates the volume that we've been craving.
Right. Thanks. I guess what David is a very short time provides you the information about what is the market design's importance. I think that's really critical piece of development for all those, like the market setup, the tariff setup especially. So what David mentioned, I guess, is from the resources, from the cost perspective, and end up adding all those parties in between, and then end up the energy cost, because energy cost at the end is linked to the development of all the economic of at that country. But how to squeeze all those costs of the stakeholder in between, and also enable those different parties to gain certain profit and then motivation into invest. I guess that's a very complicated situation that a lot of experience should be in China. So I guess what company, I guess Hong Kong company could be like the Lantau Group could be have a lot of advice, can give to different Belt and Road development on this, no matter a specific initiative that David just mentioned for solar PV. I think those are very valuable. And let me come to Sandeep. So firstly, thanks for your presentation about what all those CLP investment experience. And can you share more about the difficulty in the energy transition in Southeast Asia, the need of those new business model? And I hope you can also elaborate a little bit more specific for those carbon trading, cross-border carbon trading. Because apart from energy tariff, the carbon dollar is trading is another important factor. Can you share with us?
Yeah, I think, while there's hope and there's a direction of path, but there's still a lot of challenges I think we face. In Belt and Road country, one of the key things is policy certainty. That there's a lot of the time there's some policy rolled out, but after a few years it's changed or it's slowed down. One of the success stories I think mainland China is policy certainty. The direction of flow is fixed. You're just going to have different ways to speed it up. So when you have policy certainty, it will support the developer to invest. Because we as investor, including CLP or anyone else, we want certainty. We like to invest for long term. And energy infrastructures, we are talking about 20 years or 30 years. So we need certainty to make such kind of investment. We come in here, we operate, as said, for 20 or 30 years. So policy certainty is an important element to support the development. And that's one of the challenges I see in the market. And the other thing is, I think like David shared, how can we create quantity? Well, not all countries as big as mainland China or India is pretty big. But if you look at ASEAN country or some other Belt and Road country like Uzbekistan, Central Asia, etc., how do you create that volume? You need collaboration. And collaboration is other thing we need to resolve. And actually, ASEAN countries is setting a pretty good example. They are working very well. I think in Europe, the European Union is one example. And near our door is the ASEAN country. They try to talk to each other. Their energy ministry meeting every year. Earlier this year, Malaysia actually just hosted. So they actually every year get together to think about how can we strengthen our grid? What are the things we can work together? Sending power cross-border. So these are all good initiatives we're seeing in the market, and there are successful cases happening. Especially some example will be in ASEAN. The Laos is one of they call the battery of ASEAN country. They don't have a lot of demand, but they have a lot of resources. So a lot of powers are sent across to Thailand, to Vietnam. These are also good example of how they can work together. And then banks will come in to support, developer will come in. So these are good examples of business model to work together. And one business model I would like to share will be, I think I briefly mentioned in my presentation, is a direct corporate PPA. We see that success in the developed countries, in the US and Europe, and a lot of countries around the Belt and Road, including ourselves in mainland China, all starting to adopt. But we're still in a very early stage. Because there's a hunger of this such kind of clean demand from customer. I mentioned the problem of policies. So if there's a right regime when regulation allow developer to deal with the customer, then this can speed up much faster, open up the market. So these are some successful business model we have seen. And on your last question on the carbon credit, Well, carbon credit has had a lot of evolution across the years. I think it started in 2005, the Kyoto Protocol. The concept was developing country will pay for the carbon credit on the less developed country. So when mainland China's renewable energy started, a lot of these wind farms, solar farms, they are lowering the emission. So the credit they have, they can sell to the companies in Europe to lower their emission requirement because they have emission requirement in Europe. But sadly, or not sadly, this market has been developed a lot. There are a lot of compulsory market being developed, and there's a voluntary market. But it's not so regional now, and it's not so global. The COP30 just happened in Brazil. Annually, the governments get together and discuss this. But there's still a lot of work need to be done. But the good thing is we realize at least each country are establishing their own carbon market to meet their target. And there's a voluntary market. And Hong Kong can play a role. We have Hong Kong Exchange is also trying to do exchange of carbon credit. So there's still a voluntary market that there's a lot of opportunity, and Hong Kong can play a clear role. But having said that, it's focusing more on those expensive technology. Wind and solar is really coming down the LCOE. Like David shared, the cost has come down so much. So you don't need the credit. It's already financially viable to invest. So we will see that wind and solar, such kind of more mature technology, is very hard to have carbon credit. But new technology, hydrogen or any other new technology or some natural-based solution, there's still a lot of opportunity to utilize that, to make the project viable and trade it to the company if needed.
Thanks, Sandeep. Yeah, I guess those like COP PPA are a very important piece to driving the acceleration of this transition where populated investor and also it could be even like, for example, a data center, if they want to build in a certain country, they want a green power as well. So how those countries can enable the direct COP PPA, I guess that's win-win for multiple parties. And then the emission part is also interesting now. Every country have their own demand. So how Hong Kong may play a role in terms of that carbon trading or whatever, that's another topic that we could further explore. So with all this, I want to come to Serena on about the financing the transition. So as we all know, Hong Kong is more significant in like growth, green finance hub now, lots of like funding. So what are the advantage of these green finance tools like the Hong Kong taxonomy or transition finance you mentioned that can contribute to this like Belt and Road, powering Belt and Road projects?
You know, one interesting comment that I wanted to make is further on to Sandeep's comment about carbon credits. The issue is, although to me, I breathe the same air, but then 1 ton of carbon credit is not priced the same in different countries, under different jurisdictions and under different standards. Now, a compulsory like carbon credit in Europe will cost you maybe 70, 80 euro. And then a voluntary credit, huge amount of differences. The more nascent the technology, the more pricey it is. And depending on who is actually selling it, who is verifying it, the price is so different. Now, I think the heterogeneity of that market is exactly part of the challenge of this, because how can I or anyone as an investor look at different projects and be able to draw a line and say, I think this is good carbon credit, I think this can offset my emissions, and I think this is credible enough. If I buy this means something, right? Green energy certificates in China are priced so differently with the ones we buy in Hong Kong. Now, coming back to taxonomy. Now, that's exactly why we need a taxonomy, right? Because now that we know what the economic activities are, then who is to say that economic activity is green or not? Now, different people will have different views, and to channel the market, to accelerate the market, that's where you really need someone to come up with some kind of standards on, classifying what exactly is green. Now, to me, I think the bigger important, segment is actually transition, because on that, the risk is higher. Some of the technology might not be as commercialized as like solar technology. And based on that, how do we know what is the technical specification, right? And how do we ensure that the investors feel comfortable enough? Now, the last part I wanted to talk about taxonomy is a little bit controversial. I was looking up earlier before this panel. EU taxonomy was launched April 2021. Take a snapshot 2023. How many taxonomies are there? Less than 20. latest IPSF has a report of how many taxonomies are there, including the ones from Hong Kong. I don't know whether any of you can make a guess about what that number is. It's roughly 50 to 60. And this is, again, 5 years' time. So it's not even like a twofold, it's like multifold. So the question remains, the jury is out there around, do we need more taxonomies? Or do we need one or some that actually standardize the market further to actually channel investor interest? So I think that is another part of the story. But anyhow, I think the rules such as taxonomy does help on standardizing the projects, giving additional transparency, credibility to ensure the investor feels comfortable. Now, case in point is that for Belt and Road, for example, we have facilitated China clients to invest in Middle East. Now, you need to kind of harmonize the two and say, I think this project is green enough, right? And so things like taxonomy actually really help to facilitate the conversation.
So just now in your presentation, you haven't finished the part on the transition finance. You want to talk a little bit more about it?
How much time do I still have left? Now, I think transition finance, right, as we mentioned earlier, is like a 2% of the overall market, and there's a huge capacity to grow. And the challenge, I think, is still on the same issue, i.e. standardization. Now, I think that a lot of things we can borrow from China's great success, because in China there are different pilot schemes on transition taxonomy. Now, Hong Kong has one as well, so that definitely is, how should I put it, a pragmatic accelerator, because let's face it, not all Belt and Road projects or economies can immediately jump to dark green. I wish, but in reality is I think they still need to go from, let's say, fossil fuel to maybe something less like carbon, high carbon emitting, or they need to improve the current technology as the middle step, then go into renewable, right? So those are some of the projects that we wanted to finance under the sustainable finance umbrella. Then under the umbrella, we need to find a way to make sure people still feel about this being credible, not just because I wanted to invest in clean coal and that's why this can be classified as transition. So a taxonomy actually serves that function, whether you do this in a corporate level, etc. Now, last thing before I pass back to you is the importance. I think we have a group of BEC members here, and we have Sandeep here, who actually has a great example of transition plans from this company. I think it is, for all of you to think about, it is indeed important to think about having a credible transition plan for your own company. Now, it serves different purposes. One is communication. Like you can communicate to investors about how serious you are. And the other thing is you help to plan your CAPEX and plan your investments accordingly once you have a plan. Unless you have a decarbonization plan, you actually don't know where your number is. There's really very limited levers you have in terms of doing that. So I think for those who hasn't thought about it yet, I think it's definitely worthwhile to just give it some thought, and it's never too late to get started.
Serena, can you add a little bit more about some topic about procurement standard or transparency? You have something to add on that, or maybe 2-3 minutes?
Really? Okay. Procurement. I think last thing very quickly. The ecosystem. I think Sandeep was talking about their good suppliers in China, and then David was talking about squeezing everybody in between. Now, I think in terms of procurement, there is a way that you don't need to squeeze everybody. You squeeze less of everybody in between, like financing tools such as supply financing, etc. You can actually do it, but then just like finance, right? We are the last leg of everything. Once you identify the project and everything, then we come in and say, hello, do you need money? So it is really important that the whole ecosystem is mobilized and have the right incentive to actually do that. I'll stop at that.
Okay. So with the final minutes, let me ask again each of the panelists about what would you recommend certain key action, no matter it's for government, for business, for financial institute, to accelerate this energy transition for Belt and Road country, or to support those like company like from Hong Kong to participate? What you may recommend in terms of action? Maybe we start from Alex.
Yeah, like I mentioned, so in the future, there's a big demand for the new energy system. But behind that, technology will be very, very important. So the technology definitely need to be incubated and financed. So that's why I want to suggest so more capital should be coming to this market and pay attention to the new technology, which can combine technology with the market. I think that's what I want to suggest. Yeah, thank you.
Thanks, Alex. How about David?
Yeah, I think I would want to emphasize the partnership role here that has to be played between the forces of private capital and the state governments, right? That we understand that the state can be a great force for impact when it's working in the right way, and that private capital can be a great force for impact when it's working in the right way, but they have to be giving each other some give and take here too, right? That the state has to be creating conditions for private capital to thrive, and private capital has to sometimes also recognize that the state's ambitions to decarbonize, to effect a just energy transition, to be able to offer equitable and ever-increasing abundance of energy to their citizens, which they deserve in developing countries, might sometimes also constrain what might otherwise be a little bit more attractive rate of return, right? And that you're both working together to do some really great, important thing here. And sometimes that means you have to let the private capital owners get their what they deserve, but then also that means you have to let the state protect their population sometimes from what might otherwise be tariffs that they can't afford, or prolonged exposure to fossil fuels that they can't afford, something like that. So work together, and make concessions when you can.
Sure. How about Sandeep?
Maybe I'll speak from an investor perspective. I think it's important to have a stable, transparent investment environment, long-term stable policy, because if you have an open, stable policy, you can attract international capital. Capital is very easy. Where there's a transparency, where there's a stable policy direction, the money goes there. So we have seen in many Belt and Road countries where money goes and comes, because they see there's an opportunity there. Once they see this uncertainty or the change of direction, they would then move the capital to somewhere else. So writing on what they will say on partnership is important, but you have to create such an environment. With such an environment, investor will go and they're willing to stay for long term. So from an investor perspective, I think I like to have such a stable, long-term investment environment.
Sure. And Serena?
I want to bring the discussion back to Belt and Road countries specifically. So I think definitely there are challenges, but then I think a few of us were offering things like you need partnership, you need people to kind of make some concessions, and that's where I wanted to bring in the concept of blended finance. So someone's gonna give, and everybody can give a little bit, but then folks like multinational banks can actually give that a little bit more to actually, at least kick the can down the line a little bit more to get things started. So especially for Belt and Road countries, I know there are a lot of good, coalitions that actually can do that work. So I think the call of action is really for everybody to get together and really find a way to structure something that can really mobilize the capital.
Okay, thank you. I tried to leave a few minutes for question, but I haven't seen anybody leaving question here. But then I have a few minutes. Maybe I ask the final question to each of you. Like, as a company in Hong Kong, how do you see your advantage or that you could participate in the development of this, like powering those Belt and Road country? Again, Alex, you want to tell us a bit more?
Yeah. I think Hong Kong is a very good market for us. Not really for commercial purpose, but also we can connect a lot of customers and the financial institutions via Hong Kong. Because, like I said, the new technology involvement and incubate strongly need the green financing. And Hong Kong indeed had a lot of financial institutions, banks, and investors. So I think this give us a very, very good opportunities to connect with those capital and the potential target customers.
Thank you, Alex. And David?
Yeah, I think Hong Kong is especially really well positioned to have a close eye on what the next generation of things coming up are and being able to start allocating resources and attention to them. We all know about EVs and lithium-ion batteries and solar panels, but what about green methanol, and what about this emergent fourth-generation nuclear technology, and what about this and that? If it's happening in China, China's huge, and there's so many people there, and yet somehow still stories from there get lost. And I think Hong Kong's in a really good position to hear about those stories first and act on those stories first, and take advantage of being able to figure out the next thing, the one that needs funding because it's going to be driving forward the hard-to-abate sectors in 2045, and it needs a demonstration project today. I think Hong Kong is really well positioned to be identifying and acting on those.
Right. I guess we got a position next to China and also look at all type of new technology and a test platform here. So we probably be a trust party that people know. We could filter all those like new technology and could be applied. Yeah,
For sure.
Sandeep?
As a Hong Kong-based company, I think whenever we go to any country in Belt and Road, or any country to invest, I think is our governance system. The Hong Kong is a financial center. Company in Hong Kong, they trust you. So when you tell them I'm from Hong Kong, with a long-established business, they will respect you because they know you have a lot of things we can learn from. Because Hong Kong has grown all this year. So the governance system we have, it's a great thing that support Hong Kong company goes around to other country. And the other thing I think which is Hong Kong can support, which is touching on Serena part, is green financing, because Hong Kong is one of the largest, if I'm not wrong, green bonds issue in Hong Kong. So when I go somewhere to invest, I can always come back to here to raise a bond of support. And the government, even Hong Kong MA or other, can support such kind of infrastructure projects. So while a Hong Kong company can use our reputation to a secure project, I think the green financing plays a big role, which I think I'll pass on to Serena to share more.
So it's about our governance and how our reputation about the trust that how others see Hong Kong companies. Serena?
I think everybody said what I wanted to say already. Now, as working for a bank in Hong Kong with a very strong ASEAN background, I think Hong Kong is a very unique position where we have a lot of opportunities to connect with ASEAN, with Belt and Road, with other countries, and at the same time, we are so close to China. So a lot of technological kind of developments, etc., kind of can come through as a conduit via Hong Kong with the setting up like the governance, the company structure, legal, etc., financing markets. I think particularly, like for example, I don't think you wanted to build a hydrogen factory in Hong Kong, but if you wanted to build it in Belt and Road countries, chances are you wanted to raise the money here because you will have a bigger investor base, you have more financial institutions to help you, you have more companies to leverage from, and you'll be able to kind of raise a bigger amount of money to support your projects. I think just with that, we can really leverage Hong Kong's position to support Belt and Road countries in those regards.
So thanks all the sharing of the panelists. I guess it's time for me to close this section. I'm sure if you're interested in the topic, we can continue the conversation with the panelists along the upcoming network section. Thank you.
Thanks to the moderator and panelists for different perspectives on promoting energy transition in Belt and Road countries, and also the role of Hong Kong businesses, investors, and financial institutions in speeding up the process. Would you please come forward and take a group photo together? Thanks once again, and please be seated. And ladies and gentlemen, this brings us to the end of this session. We will have a break first before having our last session, which will start at 3:45. Thank you.